Okay, part 2 of merchandising. And merchandising, now we've added some new accounts. We've added merchandise inventory or inventory. I've added, not added, but we've given it a new title, revenues, we've called sales. We've added cost of merchandise sold, and we've added delivery expense. We could also add sales returns and discounts. So several new accounts that you may have to deal with. And we've added a sales tax payable. And just a quick reminder, when you get full sales, okay, so let's say the sale is $100 and it's 6% tax, so they really owe $106. I do not want to pay taxes on $106, but I will pay taxes on that $100. I also have to split that out because I have to collect the tax to report it to the IRS and to actually pay it to them. So when I make the original sale, I've got an accounts receivable of $106. I split it out with $100 to sales and $6 to sales tax payable. Then when I pay this, I turn around and I'm going to use cash and I will credit the sales tax payable. Fairly simple, just like accounts payable, only it's now sales tax payable. We also now have a new way of doing our income statement, and it's called a multi-step income statement, where we have sales, cost of merchandise, then the gross profit, and then income from operations, and other income. So we've kind of split this up, and it looks like this. So we have our sales and our cost of goods sold and our gross profit here. Then we have our operating expenses, and then our administrative expenses, and then that gives us total operating expenses right here. And when we get all done, this tells us income from operations, which is the amount of gross profit subtracting the total operating expenses. And then we will take away other income that's not related to our overall operations. That's called a multi-step. So there is a single step that looks like this. And that's just where you have sales, revenue, and we've added that all together. We've just kind of throw in the cost of merchandise, the selling, and the administrative expenses. Give us total expenses overall, and that gives us net income. Two ways of doing it, multiple step and single step. We'll use both. So I just wanted you to be aware of them. Our retained earnings looks pretty much the same. We have the retained earnings minus or plus the income, less the dividends. It gives us an increase and gives us our new. And then the balance sheet, we're now adding, there are two ways. There's the account form or there's a report form. And the balance sheet for the report form looks like this. It's just kind of a straight down. We have assets on top, then we have liabilities and owner's equity. The one for the account method has the assets on one side, the liabilities, and stockholders' equity on the other side. And that's actually the one I prefer, but it's neither here nor there. It'll be what the company would like for you to do. And then we do have closing entries. The only thing that's going to be added here is that cost of merchandise sold has to be closed out with the expenses as we go down through there. So when everything is said and done, this is what your closing entries look like. And that is all of part 2. So we are off, and enjoy. This is kind of a fun part.